US stocks sold off sharply Friday after the latest jobs report renewed worries over a softening labor market, in a bad start to September. Both the Dow and S&P 500 snapped three-week winning streaks, booking their largest weekly drops since March 2023. US stocks saw their worst week since March 2023 and bonds whipsawed as another disappointing US jobs report revived concerns the economy is cooling. The economy created a soft 142,000 new jobs in August below the 161,000 forecast, adding to evidence of a rapidly cooling labor market. US unemployment rate dropped to 4.2% in August from 4.3%. The jobs report suggests the Federal Reserve will have a tough decision later this month on how much to cut interest rates. The US Fed is expected to cut interest rates at its September 17th to 18th meeting, but the data revived fears that months of elevated borrowing costs have already started to pressure the economy. German industrial production fell more than expected in July, driven mainly by weak activity in the automotive sector, spurring fears that Europe's largest economy could contract again in the third quarter. Asian stocks slipped to a three-week low on Monday, with Japan leading the declines, after US jobs data added to concerns that the Federal Reserve may have waited too long to cut interest rates. China's foreign exchange reserves rose to the highest level in more than 8-12 years in August, thanks largely to a broadly weaker US dollar. China's foreign exchange reserves, the world's largest, grew by $31.8 billion to $3.288 trillion last month, booking the second straight monthly expansion and hitting the highest since December 2015. Data on consumer prices (CPI) from China showed the Asian giant remained a driver of global disinflation, with producer prices falling an annual 1.8% in August, while the forecast was a fall of 1.4%. The CPI also missed forecasts at 0.6% for the year. Nifty extended its fall to a third consecutive session on 6 September, tracking a weak trend in global markets and fresh foreign fund outflows. At close, Nifty was down 1.17% or 292.9 points at 24,852.2. Nifty formed a long bearish candle on daily charts on 6 September. On weekly charts, Nifty fell 1.52%, forming a bearish engulfing pattern that could lead to some more weakness in the coming week. 24,472 could be the next support on the downside, while 25,084 could prove tough to cross the upside in the near term.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.